Have you ever held a crisp note in your hand and wondered, what is it truly worth? Not the number printed on its face, not the promise of the bank, but the essence of its value itself. Tonight, let us drift quietly into a question that has touched humanity for centuries. What is the true value of money? In 2008, the world seemed to tremble on the edge of collapse. Banks, once seen as unshakable, began to falter. Lehman Brothers, a name synonymous with decades of trust and success, filed for bankruptcy. Millions of people watched their savings and pensions shake under the weight of fear. Yet, amid the chaos, a small, quiet idea was forming on the internet. An idea that money could be more than paper or numbers on a screen. This idea, which later became Bitcoin, suggested a new way to see value. Decentralized, finite, and guided by mathematics, instead of human promise. Value is not just what we trade or spend. It is belief, trust, and patience woven together. Every coin, every note, every digital token carries with it the silent story of human trust. Tonight, we will explore that story, tracing the thread of value from gold coins buried in ancient tombs to the invisible chains of cryptocurrency today. Imagine yourself sitting under a quiet night sky. Stars shimmer above, distant yet constant. The financial world is vast and sometimes turbulent, but here we move slowly, gently, tracing history's lessons in calm reflection. You will meet moments when money was more than currency. It became a mirror of human behavior, hopes and fears. You will see how crises teach us patience, how scarcity defines worth, and how belief can shape reality. If you like learning through gentle stories, follow Sleep Capital and join us again tomorrow night. Together, we will drift into the calm rhythm of history, investing, and human insight. Let us begin this journey quietly, letting our minds wander into the soft light of understanding, where numbers are not just digits, and money is not just a tool, but a story whispered through time. Tonight, let us ask ourselves, beyond the markets, beyond the screens, what is money? And more importantly, what is the value we give it to it? In our hearts, in our lives, and in the lessons it leaves behind.
Let us travel back to September 2008. The air was thick with uncertainty. Lehman Brothers, a bank with a history spanning over 150 years, had just declared bankruptcy. The news rippled across the globe. Stock markets fell sharply, and trust, the very foundation of finance, trembled. Ordinary people, who had relied on their savings, retirement funds, or home equity, suddenly faced the invisible force of financial fear. Banks that once seemed untouchable were now fragile. The world watched in quiet alarm as the collapse exposed how deeply interwoven trust, debt, and value were. In those same months, the United States Federal Reserve and the Treasury moved with urgency. Emergency loans, interest rate cuts, and bailout plans unfolded like a carefully orchestrated ballet. Yet even as institutions fought to stabilize the system, millions of ordinary people felt a simple truth. Money is only as strong as the belief we place in it. The dollar itself did not change, but our trust wavered. The value of money is never solely in its paper, coins, or digits. It lives in human confidence, shared and collective. Around this time, far from Wall Street, a quiet revolution was stirring on a digital form. A person, or perhaps a group, using the pseudonym Satoshi Nakamoto, released a paper titled Bitcoin, a peer-to-peer electronic cash system. This was October 2008. While the world panicked over failing banks, Satoshi proposed a radical idea. What if money could exist without central authority? What if trust was not placed in a bank, but in mathematics and code? By January 2009, the first block of Bitcoin, known as the Genesis block, was mined. It contained a message almost poetic in its simplicity. The Times, 03/January 2009, Chancellor on brink of second bailout for banks. Satoshi had embedded history itself into the blockchain, a quiet reminder of the fragility of centralized trust. This digital creation was scarce, verifiable, and independent. It was, in essence, money born from the acknowledgement that trust could falter and that human history often shows us the consequences of misplaced belief. Meanwhile, traditional markets continued to falter. In March 2009, the Dow Jones Industrial Average hit a low of 6,547 points, nearly half of its pre-crisis peak. The world's largest economies teetered, and yet through this turbulence, lessons of value were emerging quietly. Gold prices began to rise as investors sought something tangible, something historically enduring. In the background, Bitcoin quietly grew, its supply fixed, its network slowly expanding, an embryonic demonstration that value could exist without physical form, purely through consensus. Even ordinary stories reflect this. In 2008, millions of Americans lost homes to foreclosure. Families who had invested in subprime mortgages learned the stark truth: financial instruments, no matter how complex, cannot replace prudence or understanding. The crisis was not merely a technical failure, it was a reflection of human behavior. Trust, fear, and perception shaped markets more than numbers ever could. And it was in this quiet reflection, away from panic, that some began to understand value is not intrinsic. It is observed, agreed upon, and maintained collectively. Tonight, as we sit together, let us picture these moments. The chaos of Wall Street, the quiet emergence of Bitcoin, families navigating uncertainty, central banks moving like gentle currents to steady a storm. Each of these events carries a lesson about money, trust, and value. They remind us that finance is not only about markets and instruments, it is a human story. It is the story of how we assign worth, how we measure belief, and how we respond when that belief is tested. By witnessing history, we begin to understand that money, in its truest sense, is a reflection of human confidence. It can fail, it can falter, and it can rise again. And in that quiet knowledge, we find a gentle rhythm, a lullaby of lessons that the world whispers softly to those willing to listen.
As we reflect on the events of 2008 and the quiet emergence of Bitcoin in 2009, a profound lesson appears. The value of money is not fixed. It is not the paper, the coin, or even the digital token that carries true worth. Value exists in trust, belief, and human behavior. Take the example of the US dollar. It is no longer backed by gold since 1971, yet it remains the world's reserve currency. Why? Because people collectively agree it has value. Banks lend it, governments collect taxes in it, businesses trade in it. Its strength comes not from intrinsic material, but from shared confidence. When Lehman Brothers fell, that confidence faltered, and the dollar wavered against uncertainty. People realized, in the quiet panic of those days, that money is as stable as the collective belief in it. Bitcoin offers another lens. Its creator, Satoshi Nakamoto, introduced a system where trust is mathematical, decentralized, and predictable. Unlike traditional currency, Bitcoin's supply is finite. Only 21 million will ever exist. There is no central bank to print more in times of panic. Its value emerges not from a promise of authority, but from scarcity, security, and consensus. The first block mined in January 2009 demonstrated this principle. A monetary system can exist without reliance on human institutions.
Consider gold, another form of money whose history spans thousands of years. Gold does not corrode, is scarce, and has been consistently recognized as valuable across civilizations. Its worth is partly intrinsic, partly human-imposed. People trust it to preserve wealth when paper money falters. In 2008, as stock markets collapsed, gold prices began to rise. Quietly, steadily, as investors sought a safe harbor. This mirrors Bitcoin's early philosophy. Scarcity, security, and trust combine to create lasting value. Now, let us explore why this matters. In finance, understanding value is the difference between panic and calm, between loss and patience. When individuals understand that money's worth comes from collective trust, they can make decisions rooted in insight, not fear. For instance, investors who held gold or well-managed assets during the 2008 crisis preserved wealth, while others, driven by fear, suffered. Similarly, early Bitcoin adopters recognized that, despite volatility, the finite supply and secure network could retain value over time. Value also extends beyond individual holdings. Societies depend on money as a medium of exchange, a store of wealth, and a unit of account. When these functions fail, as in hyperinflation cases such as Zimbabwe in 2008, we see how fragile belief can be. People traded goods directly as the local currency lost meaning. History quietly whispers, money's power lies not in its physical form, but in the shared faith of those who use it. In short, the core concept we must grasp is simple, but profound. Money is not just a tool. It is a reflection of human confidence, of patience, of collective understanding. Its value emerges from belief, from scarcity, and from trust. Whether that trust is placed in a central bank, in gold, or in a decentralized blockchain, each historical example, from Lehman Brothers to Bitcoin, teaches us this. Tonight, as we drift into reflection, imagine money as a river. Its surface may ripple, it may surge in storms, but its flow continues because people believe in its path. Value is not static. It is living, breathing, and dependent on human perception. Understanding this is a step toward calm investing, patient observation, and wisdom that endures beyond markets, beyond fear, and beyond immediate uncertainty. Tonight, we meet the people whose choices, patience, and insight left a quiet mark on financial history. These are not fictional characters, but real individuals whose actions demonstrate the principles of value, trust, and time. Let us begin with Warren Buffett. Known as the Oracle of Omaha, Buffett has long taught a timeless lesson. Time is the friend of the wonderful business, the enemy of the mediocre. During the 2008 financial crisis, when markets plummeted and panic gripped investors worldwide, Buffett remained calm. He saw opportunity in despair. Berkshire Hathaway invested in companies like Goldman Sachs and General Electric, using patience, thorough research, and confidence in fundamentals. His approach reminds us that value is not always visible in the chaos of the present. True understanding comes from observing the long-term rhythm of business and trust. Now, consider Paul Volcker, who served as the chairman of the U.S. Federal Reserve from 1979 to 1987. Decades earlier, he faced inflation that threatened to destabilize the economy. By raising interest rates to unprecedented levels, he tamed runaway prices. His lesson is subtle. Monetary policy, when guided by principle and understanding of long-term consequences, preserves the trust that underpins money itself. People often forget that the stability of currency depends on careful stewardship, discipline, and a willingness to endure short-term discomfort for long-term security. Turning to cryptocurrency, Vitalik Buterin, the co-founder of Ethereum, provides another perspective. In 2015, Ethereum was launched through a public crowdfunding effort called an Initial Coin Offering, or ICO. Vitalik envisioned a platform beyond simple money, a programmable network where smart contracts could execute automatically, transparently, and securely. His vision teaches patience, innovation, and foresight. Ethereum's journey from code to global network underscores that value can emerge from belief in utility, trust in security, and collective participation, not just scarcity. Kathy Wood, founder of ARK Invest, demonstrates a modern lesson. Through disciplined research and long-term investment in disruptive technologies, she focuses on innovation's potential rather than market noise. During periods of volatility, her philosophy emphasizes understanding intrinsic value over speculation. Like Buffett and Buterin, she exemplifies a calm approach to observing trends, assessing risk, and appreciating that value is rooted in fundamentals and human belief. Let us not forget the ordinary people whose choices quietly shaped history. In 2009, the first Bitcoin transaction involved 10,000 BTC paid for 2 pizzas by Laszlo Hanyecz. At the time, it seemed a trivial, even whimsical act, yet it marked the first real-world transfer of digital value. Hanyecz did not know he was participating in history, but he demonstrated a critical lesson. Value is contextual. What seems ordinary today may reveal profound insights tomorrow. This story is a gentle reminder that participation, patience, and perspective matter in the rhythm of finance. Even crises teach lessons through human action. The collapse of Mt. Gox in 2014, where hundreds of thousands of Bitcoin were lost, highlighted the need for security, transparency, and responsibility. Investors learned the value of caution, due diligence, and technological literacy. FTX's collapse in 2022 echoed similar principles. No matter how modern or innovative the platform, human oversight, trust, and ethical management remain essential. Each of these figures, from Buffett to Nakamoto to Hanyecz, teaches the same quiet truth. Value is not always immediate, and it is never guaranteed. It emerges from a combination of scarcity, utility, trust, and time. Markets reflect human behavior more than pure mathematics. They remind us that patience, observation, and understanding are the tools we carry into uncertainty. Tonight, as we breathe slowly, imagine standing beside these minds, witnessing their decisions. The world may seem chaotic, but there is a rhythm beneath the surface. Buffett's column in 2008, Volcker's discipline in the 1980s, Buterin's vision in 2015, Hanyec's humble pizza purchase, each moment, quietly and profoundly, contributes to our understanding of money and value. Through their choices, we learn that enduring principles matter more than fleeting panic, and that thoughtful action, guided by trust and patience, can quietly shape history.
Tonight, we meet the people whose choices, patience, and insight left a quiet mark on financial history. These are not fictional characters, but real individuals whose actions demonstrate the principles of value, trust, and time. Let us begin with Warren Buffett. Known as the Oracle of Omaha, Buffett has long taught a timeless lesson. Time is the friend of the wonderful business, the enemy of the mediocre. During the 2008 financial crisis, when markets plummeted and panic gripped investors worldwide, Buffett remained calm. He saw opportunity in despair. Berkshire Hathaway invested in companies like Goldman Sachs and General Electric, using patience, thorough research, and confidence in fundamentals. His approach reminds us that value is not always visible in the chaos of the present. True understanding comes from observing the long-term rhythm of business and trust. Now, consider Paul Volcker, who served as the chairman of the U.S. Federal Reserve from 1979 to 1987. Decades earlier, he faced inflation that threatened to destabilize the economy. By raising interest rates to unprecedented levels, he tamed runaway prices. His lesson is subtle.
Monetary policy, when guided by principle and understanding of long-term consequences, preserves the trust that underpins money itself. People often forget that the stability of currency depends on careful stewardship, discipline, and a willingness to endure short-term discomfort for long-term security. Turning to cryptocurrency, Vitalik Buterin, the co-founder of Ethereum, provides another perspective. In 2015, Ethereum was launched through a public crowdfunding effort called an Initial Coin Offering, or ICO. Vitalik envisioned a platform beyond simple money, a programmable network where smart contracts could execute automatically, transparently, and securely. His vision teaches patience, innovation, and foresight. Ethereum's journey from code to global network underscores that value can emerge from belief in utility, trust in security, and collective participation, not just scarcity. Cathie Wood, founder of ARK Invest, demonstrates a modern lesson. Through disciplined research and long-term investment in disruptive technologies, she focuses on innovation's potential rather than market noise. During periods of volatility, her philosophy emphasizes understanding intrinsic value over speculation. Like Buffett and Buterin, she exemplifies a calm approach to observing trends, assessing risk, and appreciating that value is rooted in fundamentals and human belief. Let us not forget the ordinary people whose choices quietly shaped history. In 2009, the first Bitcoin transaction involved 10,000 BTC paid for 2 pizzas by Laszlo Hanyecz. At the time, it seemed a trivial, even whimsical act, yet it marked the first real-world transfer of digital value. Hanyecz did not know he was participating in history, but he demonstrated a critical lesson. Value is contextual. What seems ordinary today may reveal profound insights tomorrow. This story is a gentle reminder that participation, patience, and perspective matter in the rhythm of finance. Even crises teach lessons through human action. The collapse of Mt. Gox in 2014, where hundreds of thousands of Bitcoin were lost, highlighted the need for security, transparency, and responsibility. Investors learned the value of caution, due diligence, and technological literacy. FTX's collapse in 2022 echoed similar principles. No matter how modern or innovative the platform, human oversight, trust, and ethical management remain essential. Each of these figures, from Buffett to Nakamoto to Hanyecz, teaches the same quiet truth. Value is not always immediate, and it is never guaranteed. It emerges from a combination of scarcity, utility, trust, and time. Markets reflect human behavior more than pure mathematics. They remind us that patience, observation, and understanding are the tools we carry into uncertainty. Tonight, as we breathe slowly, imagine standing beside these minds, witnessing their decisions. The world may seem chaotic, but there is a rhythm beneath the surface. Buffett's column in 2008, Volcker's discipline in the 1980s, Buterin's vision in 2015, Hanyec's humble pizza purchase. Each moment, quietly and profoundly, contributes to our understanding of money and value. Through their choices, we learn that enduring principles matter more than fleeting panic, and that thoughtful action, guided by trust and patience, can quietly shape history.
As we drift through history tonight, it is natural to wonder, how do the lessons of the past echo in our present moment? The patterns, the behaviors, the crises, they are never entirely new. They repeat, sometimes quietly, sometimes with a roar, reminding us that human nature and financial principles endure. Take the financial panic of 2008. Lehman Brothers collapsed in September, and suddenly, global markets froze. Fear spread faster than any virus. Banks hesitated to lend, investments stalled, and millions of ordinary people watched retirement accounts shrink in real time. Yet 12 years later, in 2020, when the COVID-19 pandemic shut down economies worldwide, we saw a familiar rhythm.
Markets froze, uncertainty surged, and governments poured liquidity into the system. The lessons of 2008 were applied. Central banks lowered rates, provided emergency lending, and stabilized confidence. The past met the present, teaching continuity. The principles of trust, patience, and measured intervention endured, guiding decisions through a new kind of crisis. Now let us consider Bitcoin. Satoshi Nakamoto's creation in 2009 was a quiet rebellion against conventional monetary systems. At first, it was nearly invisible, traded among a small community of enthusiasts. Fast forward to 2021, when Bitcoin reached an all-time high above $60,000. The skepticism of early years had transformed into a global phenomenon. Investors remembered that Bitcoin's fixed supply, decentralized network, and transparent protocol made it fundamentally different from fiat money. The lessons from the first block, scarcity, predictable issuance, and trustless verification, were no longer theoretical. They had become part of a new financial reality. Similarly, Ethereum's journey connects past ideals with present innovation. Vitalik Buterin's vision for smart contracts in 2015 was inspired by the limitations of Bitcoin and traditional systems. By 2022 and 2023, decentralized finance, DeFi, non-fungible tokens, NFTs, and programmable finance had transformed how people thought about ownership, contracts, and value. The present, in this sense, is a reflection of yesterday's experiments. Each historical step laid the foundation for what we now witness in the digital economy. Even traditional investing demonstrates continuity. Warren Buffett's calm in 2008 mirrors modern strategies employed during the COVID crash. Investors who maintained discipline, focused on fundamentals, and avoided panic preserved capital, while speculative reactions often caused losses. The rhythm of markets, volatility, and human response remains consistent across decades. History quietly whispers, observe, reflect, and act with knowledge, not impulse. Crises in crypto also repeat lessons. MTGOX in 2014, FTX in 2022, and smaller exchange failures illustrate that innovation alone cannot replace diligence. Investors today, whether trading Bitcoin, Ethereum, or other digital assets, must remember the past. Transparency, security, and ethical management are not optional, they are essential. Understanding history equips us to navigate present complexities with calm and confidence. The human element bridges all eras. Trust, fear, and patience are timeless currencies. In 2008, the fear of banking collapse spread worldwide. In 2020, fear of economic shutdown did the same. In 2022, fear of centralized exchange failure shook crypto investors. Each scenario may differ in technology, speed, or global reach, but the underlying psychology is the same. By studying past events, we gain insight into our present reactions and future decisions. Tonight, as you imagine these moments, the panic of 2008, the birth of Bitcoin, Ethereum's early code, the quiet choices of investors, notice the continuity. Value, risk, and human belief are not confined to any era. They persist quietly, like a river flowing beneath the surface. The present is always an echo of the past, and understanding that echo allows us to act with wisdom, not haste. The present-day digital economy, though faster and more complex, remains governed by principles observed decades ago. Scarcity matters, trust endures, and patience rewards those who observe rather than react. Whether in traditional markets, crypto, or emerging technologies like AI-driven investing, the rhythm is the same. Understanding past and present together is a gentle reminder. Value is not fleeting. It flows along the same river of human perception regardless of the era. Tonight, let us pause and reflect on the quiet rhythm beneath the noise of markets, crises, and headlines. The world of finance often seems urgent, loud, and unpredictable. But beneath the surface lies a subtle, patient wisdom, the slow truth of value. Consider the lesson of patience in investing. Warren Buffett, through decades of observation and practice, has shown that rushing rarely yields lasting results. His approach is simple, yet profound. Invest in quality, understand what you own, and give it time. In 2008, while panic gripped Wall Street, Buffett's calm investment decisions reinforced the same timeless principle. Value is not about momentary price swings. It is about enduring principles that unfold slowly over time. Just as a tree grows silently over years, so does wealth when nurtured with patience. The world of cryptocurrency teaches similar lessons, though in a newer form. Bitcoin's halving events, occurring every 4 years, remind us that creation is measured, not instantaneous. The first halving, in 2012, reduced miner rewards from 50 BTC to 25 BTC per block. The next halving, in 2016, cut rewards to 12.5 BTC. Each reduction is predictable, slow, and deliberate. The market may react with excitement, but the underlying rhythm remains steady. Scarcity, trust, and consistency guide value in ways that short-term volatility cannot disturb. Learning to appreciate this rhythm is part of slow wisdom. History reinforces these truths. Paul Volcker's fight against inflation in the early 1980s demanded discipline and endurance. High interest rates caused discomfort in the short term, but ultimately preserved the credibility of the currency. Similarly, those who held through the 2008 crisis understood the mechanisms behind quantitative easing and remained patient were later rewarded. The slow unfolding of events teaches that acting hastily, driven by fear or greed, rarely yields lasting benefit. Wisdom often arrives at the pace of years, not hours or days. Even small, seemingly trivial acts reflect slow wisdom. Laszlo Hanyec's buying 2 pizzas with 10,000 BTC in 2009 was playful and mundane, yet it represents the beginning of a long journey. Bitcoin, now a multi-billion-dollar network, grew slowly, requiring patience from every participant who chose to hold, build, or believe. It is a gentle reminder that value does not appear suddenly. It is nurtured, observed, and appreciated over time. The rhythm of the market, like the rhythm of nature, follows its own pace. Crises arrive, prices fall, and optimism returns. But beneath these cycles, the slow principles remain. Trust, scarcity, utility, and time do not change overnight. They are the quiet forces that endure across decades, linking past lessons to present realities. Recognizing and respecting this rhythm is at the heart of slow wisdom. Human psychology often challenges this patience. Fear, greed, and desire for instant gratification push people toward impulsive decisions. Yet history reminds us that these reactions often amplify mistakes. Slow wisdom, by contrast, encourages observation, reflection, and measured action. It is the understanding that value, whether in traditional finance or crypto, grows quietly and that enduring principles always outlast fleeting trends. Tonight, as you breathe calmly, think of slow wisdom as a gentle companion. It whispers through Buffett's calm investments, Volcker's disciplined policies, Hanyetz's first Bitcoin purchase, and the steady rhythm of halving events. It does not demand excitement, urgency, or panic. It simply asks for awareness, patience, and trust in the enduring patterns of value. The markets may roar, headlines may scream, and prices may jump or fall dramatically. Yet the slow wisdom beneath, the understanding of scarcity, trust, patience, and human perception remains unshaken. Observing this rhythm allows us to navigate complexity with calm and confidence. Every choice, whether small or significant, is shaped by these timeless principles. As the night deepens, let us carry this understanding gently into our thoughts. True value, like the quiet unfolding of nature, cannot be rushed. It appears in patient observation, thoughtful decisions, and respect for enduring patterns. The slow wisdom of finance reminds us that time is not an enemy, but an ally. It teaches that the rhythms of value, trust, and human behavior are predictable even amidst apparent chaos. Tonight, let this truth settle softly in your mind, as calm as the gentle pulse of the markets, steady and unhurried.
Tonight, we pause to reflect not on markets or trades, but on the deeper question: what is value? What gives money, gold, or digital currency its weight in human life? This is not a question of speculation, but a gentle exploration of human belief and perception. For centuries, humans have sought objects of trust and scarcity. Gold, for example, has been a symbol of value across civilizations. Its physical rarity, durability, and beauty created confidence in its worth. In ancient Egypt, gold adorned tombs and temples. In medieval Europe, it formed the basis of coins and trade. Gold's value was never assigned arbitrarily. It was observed, trusted, and accepted by communities over generations. Here, we see a fundamental truth. Value is a shared belief, reinforced by time and trust. Fiat currency, by contrast, derives value differently. In 1971, when the United States abandoned the gold standard under President Nixon, the dollar became a currency of trust rather than a fixed commodity. Its worth was now linked to economic stability, governance, and collective belief. People believed in the U.S. economy, its institutions, and its ability to maintain order. This teaches us that value is relational. It exists between people who agree, consciously or unconsciously, to recognize it. Even though a dollar is just paper or a digital number, its significance emerges from collective faith in the system. Cryptocurrencies add a modern twist to this philosophy. Bitcoin, created in 2009, is scarce by design. Only 21 million coins will ever exist. Its value is not guaranteed by a central authority, but by a network of participants who validate transactions and uphold the protocol. The first Bitcoin transaction, Laszlo Hanyecz buying 2 pizzas with 10,000 BTC, may have seemed trivial at the time, yet it demonstrated an essential lesson. Value is contextual and evolves with perception. As more people joined the network, trusted the ledger, and accepted Bitcoin as a medium of exchange, its value emerged gradually and collectively. The 2008 financial crisis provides another perspective. Banks, mortgages, and derivatives all had apparent value, yet hidden risks undermined that trust. When Lehman Brothers collapsed, it was not only money that was lost, confidence shattered, revealing that value is fragile without understanding, transparency, and belief. The slow rebuilding of trust in markets after 2008, with regulatory oversight and lessons learned, shows that value is not simply numeric. It is ethical, perceptual, and social. Even today, we see these principles at work. FTX's collapse in 2022 reminded investors that perceived value can vanish quickly if trust is broken. The lesson is subtle but profound. Human belief, reinforced by transparency, diligence, and ethical behavior, underpins the worth of money, investments, and digital assets. Without it, even sophisticated systems fail. Philosophically, value is both subjective and collective. It emerges where scarcity meets utility, where trust is maintained, and where human communities recognize and respect the medium. A gold coin, a dollar bill, or a digital unit carries little intrinsic power alone. Its significance arises from shared understanding, collective agreement, and patient observation. Like a quiet river, value flows not from noise, but from the steady currents of belief, time, and perception. As you imagine these principles tonight, notice that money is more than numbers on a screen. It is a reflection of human trust, patience, and interaction. The rhythm of value is slow, subtle, and persistent. Each coin, each note, each digital unit represents a connection between people, an unspoken agreement that allows societies to function, to trade, and to grow. Tonight, allow this thought to settle. Value is not a fleeting price. It is a delicate balance of scarcity, belief, and utility. It emerges from patience, observation, and ethical conduct. Gold, fiat, or cryptocurrency each teaches the same truth. What humans collectively recognize, trust, and sustain is what truly endures. By reflecting on these lessons, we can approach finance with calm, insight, and gentle appreciation for the invisible threads that weave together our perception of worth.
As the night deepens, let us slowly lower our gaze from charts, screens, and numbers, and instead listen to the quiet rhythm of value around us. The markets may roar, cryptocurrencies may rise and fall, and global economies may fluctuate. But beneath it all, a calm current flows, a rhythm that transcends panic, greed, and speculation. Tonight we follow that current, allowing our minds to rest and reflect. Consider the flow of markets over decades. In 2008, panic gripped Wall Street, yet quietly, the principles of patient investing endured. Those who held steady through the turmoil, understanding risk, diversification, and long-term perspective, eventually witnessed recovery. Similarly, Bitcoin holders who believed in the network through early years of volatility saw its value grow, slowly, steadily, and unpredictably in timing but consistent in principle. There is comfort in recognizing that the forces guiding value operate beneath the noise, whether in fiat or digital currency. Tonight, let us imagine the markets as a calm river. Prices ripple on the surface, sometimes wildly, sometimes gently, but deep below, currents move with a deliberate, patient rhythm. Scarcity, trust, and belief, these are the hidden currents that guide the flow. Even in moments of uncertainty, they persist quietly, unchanged by panic or hype. Reflecting on this helps us understand that market fluctuations are temporary, but the principles beneath are enduring. We can also observe the human side of finance and crypto. Investors feel fear when prices drop, excitement when they rise, yet these emotions are fleeting. By breathing calmly and observing, we learn to distinguish between temporary reactions and enduring truths. Laszlo Hanyec's first Bitcoin transaction, 2 pizzas for 10,000 BTC, may seem humorous in hindsight, Yet it illustrates patience, experimentation, and trust in a new system. Small acts repeated over time with understanding shape history. The 2008 financial crisis, the 2020 COVID market freeze, and the 2022 FTX collapse all reflect cycles of trust, fear, and recovery. As night falls, we can let these lessons sink in quietly. There is no need to rush conclusions, nor to grasp at fleeting headlines. Calm observation, gentle reflection, and acceptance of market rhythms allow the mind to rest, even while understanding complex concepts like risk, value, and liquidity. Tonight, let us imagine your thoughts like leaves floating on a slow river. Each idea about money, investing, or crypto drifts past, observed without judgment. You do not need to hold them tightly. You simply notice, gently, and let them continue downstream. This is the essence of calm reflection, engaging with knowledge without attachment, understanding without anxiety. The quiet wisdom of financial history teaches us that patience and calm are not passive, they are active forms of understanding. By allowing our minds to rest and absorb lessons from crises, halvings, and market recoveries, we cultivate the ability to see beyond the noise. Warren Buffett's calm voice through decades of market turmoil, Paul Volcker's disciplined measures against inflation, and Vitalik Buterin's quiet coding of Ethereum all demonstrate that progress, value, and insight often unfold gently, like the slow turning of night into dawn. As the room grows darker and the night deepens, we may notice our own breathing, calm, steady, reflective. Markets fluctuate, investments rise and fall, but our understanding of value can remain tranquil. By observing the principles beneath the surface, trust, scarcity, utility, and patience, we train our minds to find peace amidst uncertainty. Tonight, let us allow the day's anxieties to fade. Charts, notifications, and headlines can wait until morning. The rhythm of value, of trust and human belief continues quietly even when screens are dark. Imagine this gentle rhythm as a lullaby, a slow, steady pulse connecting history to the present and present to the future. As you drift closer to rest, let the lessons of finance, crypto, and human behavior settle softly in your mind. Fear, greed, and volatility are temporary. Patience, trust, and understanding endure. Let your thoughts flow gently, your mind relax, and your body settle into calm. The markets will continue their work, but tonight you may rest. The quiet currents of value run deep and steady, guiding the world as you close your eyes and drift into sleep.
As the night reaches its quietest hour, let us pause one final time to reflect on the gentle lessons of value, patience, and trust. Tonight, we have explored the story of money, from gold and fiat currencies to the modern world of cryptocurrency. We have traced how human belief, time, and scarcity shape what we call value. And through history, we have seen that calm observation, disciplined action, and ethical behavior are the quiet forces that endure. Remember that every number on a screen, every coin, every note, is more than a mere symbol. They are threads of human trust, woven together over generations. The 2008 financial crisis, Bitcoin's early days, the halving events, and the collapse of FTX all demonstrate the fragility and resilience of value. They remind us that while markets may roar, the principles underlying them, trust, patience, and collective belief, remain steady and true. Tonight, I invite you to carry these reflections gently into your own life. Let the rhythm of value guide your understanding of money, investments, and crypto. Notice the subtle difference between temporary fluctuation and enduring worth. Observe without panic, consider without haste, and remember that time is often the truest ally in both finance and life. If tonight's story sparked curiosity, I encourage you to leave a question or thought for me. In tomorrow's story, we will explore it together, gently uncovering insights that history and markets have to teach. Every question you ask, every reflection you make, is part of a larger journey toward understanding, calm, and wisdom. And now, as you prepare to rest, let the lessons of tonight settle softly in your mind. Let your breathing slow, your muscles relax, and your thoughts drift gently. The markets will continue their work, the currencies will continue to flow, but for tonight, you may rest. Sleep well, and let the rhythm of value, patient, calm, enduring, accompany your dreams. If you enjoyed this gentle journey through the world of finance, investing, and cryptocurrency, I invite you to subscribe to Sleep Capital, like and share these stories with those who might find comfort and insight in them. Together, we can continue learning, reflecting, and resting with wisdom. Sleep well, and let your thoughts rest with the quiet pulse of the market.